Okay, so in this little video, we're going to actually look at what the price action could potentially look like off of a very good level or area. How does it react? What are we looking for? How can we potentially trade it? So we're looking specifically, so this is a fading example. We're looking at the Bund as we have seen in a lot of these other videos. And you'll notice I go through this because I understand the price action. I can explain it. It applies pretty much to all markets, except if you're trading a very, very thin market. But let's just look. Bund futures, we're looking on the 29th of 10th, 2015. Now, first and foremost, before we show you the video, I'm going to actually show you what the structure of the market kind of looks like. So if I just pick this out right here, this is what we were looking like on the day. So this is a 60-minute chart. This was the previous day. We had sold off, and we come into this area now. Now you can basically spot out quite easily at the really key area. We've got 157.67, 157.79. This is 73 in here, and that level is 78. So realistically, between 73 and about 79 or 80 is a very key buying zone. But it's a really big buying zone because this is a daily and weekly high, and this is also a very important daily high. So we've got weekly and daily highs, previous highs. So this was previous resistance. Now we're hoping support. So we're looking potentially, the market's now trading around this area here, as you can see. And we're going to be playing it from this point of time, which is about, just as the cash comes in, this is our, I think this would be our 7 to 8 a.m. Initial balance. And we're going to be looking at how the price reacts on the cash. And we're just going to look around 10 minutes past the cash. We're looking for potential buy in this region. We're going to try and examine the price side and see if there's any clues and see how we can trade around it. So let's take a look at this. Here we go. So currently trading 157, 90s, 91s, as you can see in here. And the market is currently trading just very near its lows. The 157.87 is now its lows. We know that our area is basically somewhere down here. So this is our buy zone. And when we say buy zone, it's very strong buy zone. So be prepared. If we get into this area, that could be a very quick auction process. We're looking at this area in particular. The minute, we're trading 157.92s. Just hovering over these lows here at 157.87. I'll try and see if we can trade this. 100 lots just traded into 90s. Now notice on the book, the biggest size that we can see on the book is at 86s and 82s. So if we had to point out biggest size on the book, we're seeing at 86s around 600 lots, 82s and 80s. 80s is just in front of our zone. I mean, likely in this area, we're probably looking at 80s to 82s, potentially a front running area. So let's just watch the price action here and see how it reacts. Try and trade this out here. Just come through that low at 87. That 86 bid has just been taken out. See if we go offered here. We've just gone offered. Not much on the bid there. We've just taken it out. Taking out 86s, now trading bid 84s, offered 85s. Just traded a little, very little at 83s. Just trying to go offered here. Just gone offered 83s. Traded 82s. We've just gone immediately bid, and someone just bought 100 lots there at 84s. Someone just bought our market, and now an 80 lot just traded 84s there. Someone just traded down at 82s. It's been absorbed. Seeing a bit of absorption there. Now he's gone bid and he's got 200 lots there. So someone's trying to buy around this region. Now we've gone bid aggressively here. Okay, we're going to try and get involved here because this is ahead of our area. But notice how we're not able to go offered anymore. And we've just gone bid for the first time. We're trying to get filled here. We're not getting filled anywhere here. So this is pretty aggressive price action. Look, they see none of these bids have just gotten filled. So we're seeing some very aggressive price action. We're going to try and get involved in here because it seems as if it's already auctioned. Now notice, I haven't been able to get filled anywhere. And I'm going to try and probably hit market somewhere around here because this is taking a little bit more risk than I want to. However, and I'll try and take another 10 lot in here, possibly 89s. The key aspect here that I just wanted to point out, notice we came down to these 82s. Ahead of our area, 79s is our area. And notice how when we got to these 82s, someone reloaded here and someone lifted 100, then lifted 80. And then as soon as this wasn't going off anymore, someone came to 83s with 200 lots. No one traded into him, so then he took 84s out. 84s went bid, then he went bid at 85s, 86s, and then look how at each price this has not been able to downtick more than 2 ticks. It's been sitting on the bid ever since it got picked up at 82s, 83s. Now, remember what we spoke about in the auction market theory. When you've got, for example, you're auctioning off £1 million jet at £1,000, and this is probably not the similar case, but let's say you're auctioning off £1 million jet at 500,000, still pretty good value. You're getting down to this area where it's 500K. You're auctioning off for 500K, and then someone steps in and says, "This is really good value. I'll buy it. I'll buy it at 510, 520, and I'll buy it at 560." Buy it again at 530, 570, 80, 90, and then they keep buying it up until they feel as if this is valued a little bit more closer to what it should be. And that's what you're looking for in the price setter. When you're seeing a good fade, a good price action fade between, at a particular area, a particular level, the buyers come in. For example, in a buying opportunity, the buyers come in and they lift price by price. What you don't want is for it to start downticking, spending too much time here. The fact that we couldn't spend more than 10 seconds down at these prices shows me that these prices are good value for buyers. And that's so important to just understand that. Now, we didn't get filled. We didn't manage to get fill on the second 10 lump, but notice still hasn't been able to go offered more than 3 or 4 ticks. And that's what you want to see. A rotation, when you look at rotations in the market, usually you're looking at rotations between 5 and 6 ticks. Now, if it cannot do a single rotation back, that means that the buyers are overwhelming the sellers at this point. So what have we seen here? Let's just make a few observations. So at, or rather, just above key buying zone, buyers begin to clip big size. When I say big size, I mean we saw 100 lot clips, we saw 80 lot clip, we saw a couple of 200 lot clips. If I'm not mistaken, we saw some pretty decent sized clips where someone was coming to market and lifting the offers. Lifting the offers aggressively. So this is what you want to see. It gets to an area, it's valued cheaply for the buyers, and they're coming and lifting aggressively. Now, another characteristic, no rotations lower of more than 4 ticks. I think we saw a 3 tick rotation. maybe a 2 or 3 tick rotation, but there has not been a bigger, I mean, we're trading all the way up. At this point, we're trading all the way up at 01s. Now notice, from 82s, we've basically done a 20 tick straight line rotation from 82s all the way up to these 02s. We've done pretty much a straight line rotation. Now, these are some observations you got to keep in mind. When we got there, the auctioning was quick, it was swift, offer after offer was lifted. And so offers lifted aggressively. These are the characteristics you want to be looking for if you're looking for a potential buy opportunity at a really good level and you want to see good auctioning. That is ideal price action. Now, some people might be sitting, some people might have traded this differently and said, I'm going to sit bid at, if I know my level is 79s, I'll sit bid at 82s, 81s, 80s, 79s, or maybe even buy over the area. You might say, I'll buy at 84s, buy 82s, every other tick, 81, and then you just kind of buy this whole region. You're willing to step in at this whole region and buy it. And your stop's obviously a lot lower than that, but you're buying this whole region and getting an average price within this area. Your average price in this case scenario would probably be this middle price here at 80s. So that's kind of a way you could have traded it. In my opinion, if when I'm fading, I'd like to wait for the the price action. So in my case, if I were to trade this actually and was looking for this, I will do something like this, but I wouldn't do it with my full clip. So instead, what I would do is probably make it a 5 lot instead of a 10 lot. I buy over the area, something like this. And I'll stay light on my feet until I see the price action. When I see the price action, I'll start buying double clips, or my full clip rather. So when I start seeing the price action and I see someone stepping into market, I'm aggressive. I'm stepping in. Let's say we saw the price action 83s, 84s. I'll buy 85s, 86s very aggressively. And I see that. Once I see that, I don't need these anymore. My stop's below this low at 82s. It should never get back below these 82s. That's potentially how you can trade these fading setups. And I hope you guys could see the reaction off of that level was very, very significant. We've just now traded from 82s. We've gone up, a good 24 ticks now, 25 ticks, in fact. So these kind of trades where you get really quick moves off of an area, you have to be super tuned into the price action and what's actually going on the order book. And as soon as you see the aggressor, someone stepping in saying this is good value, you should be buying with them, staying with the flow. So hopefully you guys saw something there. It's kind of enlightened you. We'll do a couple more examples, and hopefully at the end of this, we'll all be experts at trading fading and contrarian opportunities. Thank you very much for listening.